Okay, financial accounting, global settings, tax on sales and purchases, uh, posting, define tax accounts, tax accounts. Okay, transaction will be BST, EST, 40 and 50 will be debit and credit entries, rules. Chart of accounts will be RC44, RC44, we don't have it. Okay, new entries, RC44, entry. West, Q. Okay, we select this accounts. Accounts will be tax code, country, and GL account. As simple as that. F is 00, RC44, RC44, tax. Input sales tax 80300. Okay, new entries. Tax code will be for input tax. Ticket tax F7, filer services, filer manufacturing, filer 3%, and we have tax PK. Okay, let's say we go with filer manufacturing 8%. Country is PK, GL account is 80300. Save. Double 842 accounts. We have 80300. Okay, this is all already predefined. Okay, now this is done. Assign country and tax codes to GL accounts. RC44. 80300 country PK FM. 80300 PK. Save. Double 842. Tax code country 80300 country PK tax FM. Now you see 8842 and RC44 have the same pattern of chart of accounts. So this is a useful tip if you are making multiple company codes for a mother company, and if you have the same pattern of chart of accounts, you just have to copy it. You don't have to redefine everything. Save. The numbers will remain the same. The assignments will remain the same, and lot of legwork will be saved. So you don't have to remember GL codes, GL account codes. Define account for exchange rate difference posting. We will discuss this in a separate lecture. 8842. Debit, credit, save, and we will have an account for exchange rate. Debit will be expense, credit will be income. Exchange rate differences occur when you're clearing a vendor and paying a vendor in their currency, or when you are paying for a foreign service or importing something. So if the dollar rate goes down or gets weaker against PKR, the credit account will be hit. That will be a separate profit. Realized and unrealized is something part of it. Debit will be expense. If USD goes up, is more expensive and stronger against PKR. Any difference between invoice date and payment date, the difference will be exchange rate difference. We will discuss this later. Assign tax code for non-taxable transactions. Okay, this is important. RC44 V0 A0. Jurisdiction code is FBR code. You can give the jurisdiction code. V0 is not defined. The what is for 0. A0 is not defined. Okay. Okay. These are defined for this company code. All right. We'll define it later because this is just 0 code. Rubik's cube. RC44. Double 842. V0 A0. It will give a warning, just press enter and it will avoid it. Now comes withholding tax. We're not doing entries right now because we have to complete the configuration first. We will not go with withholding tax. We will go with the new extended withholding tax. Basic settings. Check withholding countries. PK. PK, WST Pakistan. Okay, we have it. Tax keys, withholding tax keys. Now, withholding tax keys will be filer, non-filer, country key, PK. Okay, offset key, withholding tax name will be 2003. And this is national tax code or national tax number. This can be any NTN or STN or federal or provincial SIN tax code. This code can be given over here. Okay, and the name can also differ. Reasons for exemption, recipient types. Okay, fine. Calculation, text type. Now text type is filer, non-filer. And over here, either you pay at invoice level or at payment level. In our country, it is at payment level, deducted at payment level. So what is the nature of withholding for? It is the liability, right? Country PK. Very easy. Filer taxes, withholding taxes. Okay. So any code that will be defined here will be given under filer taxes. Any code. And there will be a non-filer as well. You can make a new entry, non-filer, non-filer category. Okay. Based on net amount after discount, uh, it's a rounded figure. There is a rounding rule. Cash discount, pre-withholding tax. Cash discount is applied before withholding tax is calculated and applied to it. No accumulation, no rollover. It means no rollover. Base will be manual. Manual entries can be done. Manual withholding tax amount can be done. Okay. And withholding tax for payments. It's for payments with vendors. Okay. Tax code level. So base amount will deduct from sales tax. Tax amount from tax code level. Whatever the amount will be deducted will be calculated at tax code level. No central invoice, which means on every invoice, if there is one vendor and multiple invoices for one supply. For example, you have ordered 1,000 barrels from a vendor. 10,000 barrels, the vendor will send the invoice for 2,000. Withholding tax will be deducted on 2,000. Then invoice comes in for 3,000 and so on. Central invoice means all the invoices are combined and central one invoice is considered as one invoice for 10,000 barrels. Minimum check at item level. Item level is the vendor item tax level. Minimum base amount check at payment doc level. The whole payment doc can be checked. Minimum base amount check at document invoice level or payment document level. Base exempt amount check at payment document. We go for minimum check at item level. Save. Save. Okay. Filer, non-filer. This is how you will configure the codes. These are types. Filer is a type, non-filer is a type. Exchange rate type or withholding tax type. Country TPK. Exchange rate type will be M, O, R, whatever is available to us. M is average rate. Average is day rate. Euro. M, standard translation at average rate, which is day rate. M. Save. Define rounding rule for withholding tax type. Company code unit is 100. For Japanese company or for other company, you have to define the units. It will be 100 for our company code, so it's by default the same. Condition type. Okay, condition types. Condition type. These are Laws, condition types are laws that will apply to it. You can define the laws. If there is these are the laws that can be applied over here. Keep it empty as default. Go to the next text code. Define withholding text code. So we have non-filer and FL filer. Server is getting no. Country keep. Okay. Okay. We have filer T3, 3% on 16% of sales tax. Okay. Subject to tax, 100% of input tax will be considered, and posting indicator is very important. It is standard posting. Bank vendor customer line item is reduced. This is the standard that we're using here. Offsetting entry to GL account, passing up. Offsetting entry to GL account. Another GL account is introduced, but the vendor line item is not reduced. So it adds to the liability. But in vendor customer, the line item is reduced because you're paying for the vendor on behalf of the vendor. And you issue a certificate, a tax certificate to the vendor when he submits his returns. That is used. Okay. That is the process here. 3% will be applied on 100% input tax amount. Okay. So let's say new entry, non-filer, tax code 6. 6B 2022 description 6% non-filer WHT services. Okay. Percent subject to tax 100%. Posting indicator is 1. Withholding tax rate is 6%. Region is Islamabad. Federal is collecting the tax. You can have your own provincial regions and codes. Save. Easy. Okay. This is done. NF6P. Defined formulas. We don't have to discuss it right now. We just want to have simple integration right now. After that, we can discuss. Assign withholding tax types to company codes. Double A42. Double A42 is not there. RC44 will not be there too. Double A42 text type will be filer. No value. Okay. Withholding tax agent. Your company is acting as tax agent. Validity, keep it empty because it's open-ended. For customers subject to withholding tax, self-withholding agent, whether the customer is self-withholding agent or not, you have to validate that. Okay. Exemption. If there are exemptions to this type, you can mention it here. Save. Define a period of authorization for deduction obligated from 0101 dot 2022 until 31/12/1999. Withholding tax number can be your NTN STN number of withholding tax number. Okay. RC44 filer. We can do the same for non-filer. Withholding tax agent. Save. Okay. Filer and filer. As in home assignment, you do for the non-filer. Activate extended withholding tax code. Double A42. RC44. Enter. Okay, once done, when we have posting, we'll discuss posting in the next class.